Okay, so let's take a look at retracements first. Okay, so again, when we're looking for possible support, we want to start our analysis by looking for the prior low to high, and then that'll give us our ratios below. Okay, so we'll take a look here in a minute. And then for possible resistance, we want to run our analysis starting with the prior swing high to the low, and that'll give us our retracement levels up. And all the extensions is that once you pass your swing high point in this example and you've got your retracement levels and you get back to that high, then the Fibonacci extensions come in play. So that's the 1, 2, 7, 2, etc. And the same for the downside. So once we get through the various retracement support levels to the downside, we get back to that swing low where we started our measurement, then these become extensions to the downside. Okay. Yeah, so when you're looking for support, you're going to go, so if the market's starting to move down and you're thinking, okay, where is support? Okay, so price, you've had a good move up on price, but now it starts to roll over and it's starting to move down. You're thinking, okay, is this going to just really keep going down, or where are the major areas of support? So what I want to do is immediately find out where's that 382 retracement, where's the 50% retracement, where's the 618. So we're going to go back to the prior swing low. Whatever time frame you're working with, there will be a point, that it's going to be lower in this situation to the high. So you take that low, pivot high, whatever time frame, and then your fib tool will give you these automatic retracement levels. So I want to see where that 382 is. I want to see where the 50% retracement and the 618. Okay, so support down, and then where are those levels if we take the high to low and we're looking for the move back up. Okay, where could the market maybe stall? Well, first it has to get through the 382, okay, right here. Then it has to get through the 50, and then if it can get through that 618, hold there a little bit, then it's going to high probability back to the high, and then the 1272. Okay, so for the time frames, if you're a swing trader, okay, which most of you here probably are, so swing trading is, what I consider trades that last more than a day. Usually you'll look to put on a trade that's going to last 3 days. It could be 1 day, 1 day to 5 days to 2 weeks, something like that. So if you're a swing trader, with that kind of duration of time, I always look at the daily. Okay, always the daily first. Okay, daily first, and then I'll go and I'll look weekly, but always the daily first. And I'll take a look at the weekly. That'll give a lot of times confluence and some other major moving averages. And then I like to drop down. I like to look at also the like the 4-hour time frame primarily, and maybe even down to the 1 hour. But for these swing trades, I'm always, when I do my price target analysis, it's all based on the daily time frame for swing trades.